Okay, what's going on? What's going on? Good evening. All right, so this here, guys, is the buy model that I personally give out. Now, I've got a lot of stuff going on here in the office, as you guys can see. I'm actually putting together the academy, right, for the beginners, and then also a couple things for the premium group. So I'm going through a lot of old notes, going through a lot of, just old charts that I've printed off, and pretty much just really locking in and refining this thing out to make it as simple as possible to really help you guys, see these 7 steps in the markets. Okay. And so this is something that we were looking at today. We were looking at the move that we took yesterday, right? Based on the very similar pattern, right? When it comes to the pattern that we wanted to see. And then the overnight bias that we had going into today's market was just really good. Okay. And so as you can see here inside the members wins, guys, if you haven't had a chance, it's going to be in the description of this video. You can go ahead and join the free Discord. And then if you're wanting to trade live with us, you can join the premium group as well. Now, these are some of the wins that members had in here today. My good friend Tay, an individual who's been rocking with me since 2022. I've been mentoring him and stuff as well. He's definitely taken off and gotten to that 4th step, right? He's getting into that 4th step. He's transitioning from that 3rd step to that 4th step to being self-sufficient, and doing this no matter what, without group, with group, it doesn't matter, right? And so happy for him because he's been able to really apply these concepts and put stuff together as well. Okay, so this was obviously the day that I had today, right? Now I did trade a little bit smaller of size, right? Just focus on stacking green days. Was it across 5 accounts? Was able to do 528 across each account, which ended up being like almost a $2,000 day. 1920. I had like one small scratch loss. Now the order that we took today was really cool, right? Took us about 17 minutes and 42 seconds for this trade, right? We ended up entering 2 contracts across each account, right? So 2 contracts and then 5 accounts. Caught here, right? 132 points, right? I really don't count ticks, me personally. And that ended up, like I said, ended up taking us 17 minutes to capture, which that's really crazy. Okay. Now this is the exact trade that we took, right? We ended up entering, as you guys can see here, the entry. I believe the entry was dropped on here. The entry was 9:37 though, right? So 9:37 a.m. We waited for price. It pushed up, crossed over, made that break of structure, came back into the mitigation area, ended up finding our entry right there at 8:37 to then take that up to that previous high, which was that 5-minute high, which was 29,900, which was over 5 times our risk to get to those highs. Okay. And so, as you can see here as well, during the actual trade session, we did have individuals. 8:50 a.m. today, correct? So Tay was trading. He always trades YM. We always trade. I mean, me personally, I trade NQ. YM was my baby back when I met him, and then I didn't like how hectic he was, so I let him go ahead and take that over. But NQ is the baby. So we ended up taking the trades right here. This is going to be the 8:49. So this is after the entry. I'm going to walk you guys through the entry. But we ended up entering after we got that break of structure, which is step 6 of the 7 steps of the buy, right? And then we ended up waiting for that mitigation to come back, show us the signs inside of the 1-minute price action after closing higher high. We wanted to be buying that price below New York Open, and then that price takes off, okay? And so that's a really good play, okay? Now, I'm going to go over the higher time frame context. Now, Chad, obviously, congrats, bro. He was able to smack this trade as well, right? We were looking for relatively, I think he got in relatively around the same time we did. So that was a pretty good trade. And then this was Josh. Josh took a really good trade here with me. We did a one-on-one call. I believe it was last night or the night before. Excuse me. And we're really crisping up some of his stuff. He's got really good entries. We're just crisping up some of the trade management and then just the ideology and context behind what it is that we're doing. But really good trade by him too. So kind of just wanted to show you guys here from the beginning, like, yes, I'm calling out these trades and I've been doing this 7+ years, but the individuals that are able to follow me inside the Discord are having success. Not only are they having success when it comes to P&L, because that's not the most important thing, they're having success because they're going through the 4-step ecosystem, right? This 4-step ecosystem that I'm creating, with which one we're still building, is out the academy, right? Which is step 1, and then 2 is the go live sessions here where you trade with me live, the concepts and things that I teach. And then 3 is that you become profitable, right? You're able to go get funded platforms from those concepts that you learn. And then step 4 is that you're self-sufficient. You're able to do what you want, when you want, however you want. with being able to, generate money and print money. Okay, it's a really good trade by him there. And then looks like Chad came back. Amanda had a good trade as well, 200 plus points on there. So good win for the family. Okay, good win, and people are, like I said, are starting to really dive in. Okay, so I'm gonna dive into now the charts and the breakdown that we had for today. And so jumping right into it, dollar index, I talked about the weekly here on the far left, daily here in the middle, and then 4 hour for our direction, H1 on the far right. Now I talked about seeing an up day. Market open is going to be Monday. So we have this day here where market comes open and just expands up. Daily is in the middle. And then we have yesterday, right? Or as in today, correct? Right? It's Tuesday, right? This was the candle for Tuesday, right? And we had a massive up day, right? Closing above what I talked about, which was 101 level, right? Maybe making our way up to 102. Now, what I said was when you're looking for a higher pricing in dollar, you're looking for liquidation inside of futures and indices, or if you're trading forex, because I do have a couple people in the group that trade forex, so anything XXX USD, right? It's going to be doing the opposite, most likely, of dollar. Okay, so we were looking for some liquidations down. Now, why we weren't looking for liquidations this morning on NQ was what I'm going to go over is in the overnight price. Okay, but I was actually looking for dollar to possibly exhaust and start and see buyers start to liquidate some of their positions and maybe it come back into the range, and that's why we would see, the buy position off of NQ. But like I said, we were still looking at this long term to get and to deliver our 102, and then the overnight price with this being this strong in the overnight here for dollar, right? I think that's what pushed us as well lower on NQ and futures. Okay, looking over at futures here really quick, so I just want to jump right into it. We talked about 4 hour directional play, right? So we talked about us coming down in the pre-market into 29,800, this demand area here. Basically, it's just an area that we identify that where shorts are going to cover. Why would we think shorts are going to cover? I'll jump over just into NQ for this example here. Why would we think that? Because you got to look at where the daily open is. Okay, the daily open at this moment when we're looking at the markets here on this 1 hour here on the right, the daily open for Tuesday was here 30,650. Before we even looked at the charts at 7 in the morning, price had already covered this much ground. Okay, it already took last week's low. It already fell 700 plus points. Now, what I want you to think about, right, when you're looking to take a trade coming into that equities open, is where is that overnight player? Right? And that overnight player, and then I want you to do this, right? After you ask yourself that, ask yourself this question. If I was in that position as and winning, how would I manage it? How would I trail risk? Okay. And so if you're let's say you didn't sell, the 650s, but you sold the breakout, because that's a lot of the times what people do. And you sold down to get to, let's say where price was 500 plus points. At this point, once you start to break this new low, you're going to see some buyers and buys step in because individuals that are short and all in this blue area here, right? This is all overnight price from the open, right? These individuals are all short. They have to make money somehow. They have to do something to, reduce down that short position. Okay. And so when we come into this is why I started talking in the Discord and I said, this is going to be a really good day. I do believe I said in the general chat here before the session even started, and I've been dropping some gems, guys. Like this was our 9:37 a.m. entry right here, right? And this is with the scanner tool from Walmart. This is hilarious. Let's go. Right, because we're getting prices on discount. Okay, that's what we're trying to imply there with that little joke right there. But one thing I put in here this morning, right, was you guys can see. Good morning, 7 a.m. Today is shaping up to be a really good day. Overnight NQ is roughly down 2.5% on the asset, right? So 600 plus points, creating the type of environment where opportunities can develop quickly, right? And we also talked a little bit about in the pre-market like sizing down, maybe using half of the normal volume because price was moving so dramatically. And so personally, I'm anticipating the possibility of short covering into New York. So that just means buys stepping into the market and those individuals making profit on those shorts. And I'm not married to the bias. We react to price, not predictions. This is exactly, like I said, the type of trade you want to be in. Da, 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 da. Okay. And so this is exactly what I said. Like these are the type of RSV model trades I love to take. So when I bring over let's just jump straight into the 15 and 5, and then we'll go into the smaller time frames. Okay. Now, bigger picture again, I want to show this. 4 hour, I was anticipating, we had two options of things that could happen. If we just completely capitulated and sold off, I wanted to see 29,500 delivered, so under the 4 hour demand. And if we weren't going to, like we ended up doing this here on this candle, right? Like this ended up looking like this at one point, and oh, excuse me here. Okay, so let me try to do this. So we ended up getting this candle right here, this was 5 a.m. going into 9 a.m., right? So this was like literally New York Open. So what you're seeing at this exact point, right, is individuals who were short from the overnight started to cover in that demand, because what they were wanting is, are we going to get the break of structure and push lower, right? Or are we going to have more to trail out of the fall down, or what's going to happen, okay? And so for me, as I'm building my bias going into this, that's what I'm anticipating is some short covering, like I said, going into New York. And then we jump into 15 and 5, and I'm going to go over a little bit of oil and a little bit of stocks right after this as well, okay? Now, when we jump into that 15.5 and we really start to dive into New York price, okay, what I was looking for was this, right? Before we got open, this was what we could see. This was going to be 8:15 going into 8:30. So before we got open, the only thing we could see on that 15-minute was this. Okay, and a lot of people with, the ICT traders and smart money concept traders, they teach people to take the trade after the 5 minute breakout, and they try to find something inside the inefficiency, inside the FEG, but that's way too late. You got to know how to identify the seeking liquidity mitigation play, but you have to know how to read higher time frame supply demand, right? So it's a big fractal picture. Not everyone can do it. It's something that I've been doing for over 3+ years of looking at multiple time frames at the same time, right? And being able to read the price. Okay. And so coming into this, what I was already personally seeing, like I said, is I wanted to see long positions, but I wanted to see signs of strength. I wanted to see my signal. Okay. And so when we come into we're going to look here at the 5 minute, right? The very first 5 minute open. And we're going to look at the 1 minute now. Okay. So like goals that we were wanting to get to when it comes to 15.5, I wanted to see price push back up to the most nearest supply zone and key level, which was 30,000 whole level. And what that essentially was doing was the individuals who come down right here and shorted lower low, lower high, lower low, lower high, and then it pushes lower, there's liquidity built right in this zone. Okay. So we want to come back and grab that short liquidity if we're going to buy. Now, we're always thinking, from a probabilistic standpoint. So we're looking for setups that present us where we can have a 20-point risk for 30 or 20-point risk for a 60-point gain, which is a 1 to 3R, and then a 20-point risk for a 100-point gain, which is 5R, right? Now, situations like today, we were looking at what had the potential to present 10R, right? Which is 20-point risk for 200-point gains, okay? And so I'm going to break down the 1 minute and really show what we were seeing in there. Let me pull this over, sorry. Okay, so again, really quick, 5 and 1 minute are the execution windows I like to take my trades on, right? So I like to look at a higher time frame context all the way down. Now, there's a couple things that we want to talk about that we talked about just yesterday inside the Discord, okay? And that's going to be how we set up this buy model, okay? And so there's a couple things that I personally look for. One is what we just went over, the trend context, right? Are we in accumulation or distribution? So are we looking for a buy or for a sell? Once we've identified that, inside that accumulation, that distribution zone, we want to identify the sheep, right? We want to identify where the easy, low-hanging fruit liquidity is, right? Equal highs, equal lows, right? Inside of a range. And then we want to identify where that liquidity grab would be, where the markup slash FOMO move would be, because that, just like yesterday's trade, right? This is that liquidity grab, and then it runs up and FOMOs people. Now, if you take a look at this and you think about what today did, right? This is today's trade, right? On the 1 minute, we ended up getting this very similar price action here. Let me actually move this over here so I can show you guys exactly what I'm trying to show here. So same thing here, right? We're looking for the sheep, right? They basically create the sheep here, right? So that step 3 of that buy model that I teach is basically happening right around here, okay? And so really it kind of happens on the way down, all the way down into here. They start to sheep people right in here, but really where they get them and they start to like draw on them is going to be here. Just kind of showing this here on the 1 minute. So it looks like kind of like right in here in that zone. You guys see how that looks? So we'll go ahead and mark that. And I'll refer back to the model so you guys can mark this up yourself. Like go apply it, go do this stuff yourself, and then see if you see it as well. Okay. So this is where let's do the middle, center. Okay, so that's going to be let's do bottom just so it matches everything here. Okay, so that's going to be step 3, the sheep. Okay, now we're looking at the 5 minute, we're looking at the 1 minute because we have to have an understanding of location. Okay, and so that's where the sheep moment is. Now, once you get the liquidity grab, that's step 3. The liquidity grab happens on the 1 minute. Most people are calling this like all kinds of stuff, guys. They just don't know how to read the price, okay? But this is step 4 of the trade. So this is the liquidity grab. Most people are getting put into a blender at the New York Open, okay? And so when you think about it, again, like I said, what we're looking for is now step 4 of the how to look for buys model, okay? Stop loss hunt, right? Right here, stop loss hunt below the range lows, okay? So look at this candle I'm showing you guys from yesterday, right? This was yesterday's situation, and then this is today's, okay? So the liquidity grab is this candle here, okay? Now, again, remember, my trades I like to take are in the first 15 minutes of the hour or the last 15 minutes of the hour, and I usually look for them to be diabolical during the first 5 minutes of the open, okay? But this is going to be, let me move this back over here. This is going to be, make sure I'm on the text here. Where did the text go? Oh. I think I spelled liquidity right? Okay, so that's step 4. That's the liquidity grab. So when you're looking at it in real time, right, like on the 1 minute, like you're understanding where you're at on the 5 minute, you're waiting for that 5 minute sign of strength, right? So like one thing we like to look for when we're looking for that RSV model is we want to see the 5 minute sign of strength, and we want to know where our target was. So like as soon as you get a 5 minute sign of strength here, 8:30 going into 8:35, which I'll break down here in just a second, we seen that candle close, and immediately from right there we want to draw that line down that candle and know where our target is and look for 1 minute mitigation on the right side. Okay, so at the open you don't have that, right? You don't even get that to really present on the 1 minute, right, until the body right here closes and creates FOMO on that right side. So you see how everything's really still intact here. Okay, when you really look at everything, right? Everything's still intact. It could literally lower high right there at 736s and fall over, okay? But when you look at it from this perspective here, right, you're wanting to see it just close higher and then come back into the zone because that's what gives you the confirmation of the signal, okay? So now you got the New York Open, which was this candle here, right? And then you have the next candle, which is 831 going to 832. And then this candle slightly closes higher, okay? So that would have kind of showed me like, okay, they're starting to show it. Now, where I want to see this happen is after the 5 minute closes. So after 30 to 35, right? This would have been 33 going into 34. And then this would have been 34 going into 35, right? So some people right here will get caught trying to take the trade, right? But that's still not even in the first 5 minutes yet. You need to let the first 5 minute candle, so this candle here, right? This is part of the RSV model. You need to let the first 5 minute candle here on the left, right? You need this candle here, kind of make sure you guys can see it, right? You need that candle to close strong, then draw a line to target. Let confirmation close, then think target, then think timing entry. Okay, I'm gonna say it again. First, you want to think the signal, right? Then you want to think when it comes back into the area, timing, right? And then you want to think push to target. Okay, so that's a little confusing in that situation here. Sorry, I was getting a phone call at the same time. So back to what we were saying. Sorry, you want to think right here 5 minute. You want to think the signal, right? So this is that sign of strength. Then as soon as you get that sign of strength, you want to draw the line, right? Sorry, so you guys want to go back over the replay on this part. Sorry. So you get the signal, 5 minute sign of strength. Okay, now your game time, right? Now you're thinking step 2, target. Okay, draw a line from target through the candle of sign of strength. Now, once you get the sign of strength candle, you're thinking step 3, which is going to be timing times mitigation entry, right? Timing times higher high, higher low situation, okay? So if you don't know how to find the entry candle, DM me, but that's a whole nother story, okay? Now, the other thing that we want to add as a layer to this is buying below opening price in bullish conditions. So we've gotten through each step so far of this, okay? What we've gotten through is we've gotten to step 4, okay? We've gotten to the liquidity grab. Now, what you want to wait for is you want to wait for the thrust, right? The fear of missing out, people to basically get here, right? In this price here, and they get trapped, right? Because they don't really have a plan for what they're trying to do, okay? Now, when we go back to what we're looking for the entry, right? Because we want to go back here now. All right, so we have step 4. Now you're gonna get what's the step 5, which is the markup effect, right? So we're looking at 1 minute here, okay? So when that price starts to run up away on the very first run and starts to close higher, and goes back above that New York Open, that's what step 5 is. That's the markup effect, okay? Step 5, right? You guys see step 5 here? Strong bullish impulse away from those lows, right? That's what that was yesterday. Now, what you're waiting on here on that strong bullish push, let me make sure and label that because I know this is on video. You guys can go back and stop there and freeze it. So strong bullish push. Okay, so that's the strong bullish push, and then that's going to be step 5. Okay. Now, once you've got step 5, guys, what you're looking for is really to really activate and get your mind right for the trade is step 6, okay? Step 6, wait for break of structure to the upside. Wait for break of structure to the upside. You should have plenty of time to take the trade, okay? And so where is that break of structure here on the 1 minute on this situation here? Well, if you're having trouble in the beginning, right? Like if you can't see it, use line graph, okay? And so you can see higher high, higher low, higher high, higher low, and the structure broke, okay? And so where that break of structure is going to be here, right? So now we're going to label this, right? Number 6, break of structure, okay? So now you're thinking as soon as you get to step 6, right? You're thinking timing, and then you want everything to align up with the mitigation setup. Buying below the open, inside demand candles, inside 5-minute demands as well, right? Now, I gave this trade out today at 9:37, so I'm going to move this step 5 out of the way. Now, break structure, now you're getting ready for timing entry. I gave it out at 8:37 a.m. Now, the reason why I gave this out earlier than the first 15-minute window was because it presented the structure, right? And it presented all the key elements that we wanted into the trade. Okay, so we could have waited until 40, I'd say like 40, like 44, right? Like right up in here, like higher high, and then breaks, and then take it right in here as well. But one thing I'm really focused on is getting my entry inside that 5-minute demand candle. Okay. And so we have our line drawn. You guys know what we're looking for the target. I just use that as like a kind of a reference. Now we've gotten to step 6, right? We understand that price is broken structure, and we wait for that timing, first 15 minutes of the hour, last 15, right? Or we're going to be buying below New York Open in bullish conditions, and we're waiting for step 6 to play the mitigation. What does the mitigation look like? Okay. The mitigation looks just like yesterday's. You want to buy inside the 1-minute demand candle, your entry focus candle, right? And you want to see a signal inside that candle to take the trade with a 20-point risk. Okay, so same situation that we took today, right? We ended up seeing it just like this. So when I was eyeballing it on the stream, it looked like this at one point, right? Price came into that demand. Most people are getting stuck, right? They're not knowing exactly what to do. We're waiting to read that price. 837 prints, right? And we started to attack inside this demand zone, if that makes sense, here on the 1 minute, okay? So a better way I can show you guys this actual order will be on TradeZilla on how we actually entered it and then how we started to manage it, okay? But I want to go over step 6, or after we get to step 6, I wanted to go over that step 7 of the buy model, okay? So step 7 is usually going to have, I'm going to add some things to this. It's going to have timing, right, with it. That's going to usually be the best time that you're going to find that trade, okay? So 5-minute closes or in those first 15 minutes of the hour or last 15, okay? So price comes down. We take the entry at 837. Now, this is the mitigation, right? Because here's what's happening to people. Most people are taking this and only looking at like a 1 second or 100 tick chart, and they're making money on the way up, right? They're just not understanding on that that's a 123-point move, and they need to secure the bag on 70% of that, okay? And so after step 6 happens and everyone gets trapped, most traders, right, they're not taking the trades in these zones that I'm giving out. They're taking trades like here, right, on breakouts, or they're taking trades and getting stuck, right? Like this level would be here, and they're taking it as it breaks out, which is too late, and it comes back and does that, and then ends up going the way they want, How many times does that happen to you, right? And so this is why we wait for the step 6 confirmation to pull back into the demand. Now the candle that I'm focused on that 1 minute is our entry focus candle, just like yesterday, right? This is our entry focus candle, right? And now I'll explain more of that inside the Discord. I can't really just go all the way into that right now. But this is our entry focus candle. And so price comes right back into that. And when we have that entry focus candle, when I see a sign of strength inside the 1 minute, I'm going to take the entry. Okay. I'm inside the trade. So I was giving it out down here a little bit lower, closer to like the 93s, 92s, like right inside this level. But an average area I would say I was giving it out was pretty much right here at this whole level, 29.7s. Okay. With about a 20 handle risk, looking for about a 5R gain. So 5 times your risk, which obviously delivered in the next 1, 2, 3, like 4 or 5 minutes. Okay. And then once we got past the 5R, we were looking for, if you look to your left here, we were looking for that next structural break, right? That 5-minute structural break, which was for 20 handle risk for 200 point gains of 10 times your risk. So a 10R trade. Okay. And so just to kind of show you guys the actual trade here that we took, you can kind of see it in live time, like what we were seeing. And so this is going to be the 1 minute run over, right? And one thing I wanted to go over before I jump all into this really quick is just look how deep, guys, how far that overnight liquidity was, right? Like that overnight, we're talking down in here, we were still almost 1,000 points to the downside just to start the session, right? So it didn't even make sense to want to come into me and try to find shorts. It only made sense to be on alignment with those individuals who were short to cover. Okay, looks like we just got an open as well, so we'll kind of look at what we see for tonight and the overnight as well. But back to where we were, we found that we're finding step 7 here on TradeZilla. So this is the exact trade that we took, 1 minute, and so you can see here this would be that 8:30 candle. So they set the lows, right? They run people out, run out the early buyers, making sure they're clearing out liquidity, right? And then we get the engulfing candle, which is going to cause a lot of FOMO. A lot of people are going to start coming in here, right, and buying like here and here, like way too late, way outside of the demand candle where they should have their focus in their eyes, okay? And so what happens is they buy like right here, and then the market comes back down like this and taps them out and then goes the way that they want. Okay, that's happened to all of us, I believe. Okay, and so what they do here, they start to show that strength that we talked about in the 760s, and then they come down, right? They come up here right here, and then they finally come down, and they start to get those individuals that try to buy the breakout, right? Because they thought, okay, well, I'll just buy here because we're definitely going higher now, and then they come drain them back to where? Back to the demand focus area candle. Okay. And so now, as you can see, price comes back into the level. We already know at this point, guys, like we're ready to take the trade because we already know that we have the confirmation higher. We have special levels that we wanted to see to the upside, and we've seen our formation starting to happen, right? So at worst, if we took a trade, let's say inside this 1 minute demand, we're looking for price to at least deliver back through these short highs here, 29,780s, which would deliver, even from that zone right there currently, would deliver like right, with a 20 handle risk, right? This would deliver just getting back up to the highs, right? That's going to deliver you over 5R, right? That's a beautiful trade, okay? And so we're already shaping it up right here and thinking about seeing it. And then when we take the trade, right, bam, that's exactly when we took it. You guys see down here, I can't control that. That literally comes right straight from my data, okay? So bam, takes the trade, 29,708. Now the other really important key part was that when you're taking a buy position at equities open, you want to be buying below equities open in bullish conditions, okay? And so what I mean by that is mark the equities open. This is the 8:30 open. You want your order to be in alignment with supply demand, right? Like if this was a sell, vice versa. Like if this was a sell, it wouldn't matter. I sell the same way, right? I want to sell above New York open, the blue line, and bearish conditions down to my target, okay? So same thing here on the buy side, right? We got to close higher, we pushed down to the area. I want to be buying below 29,719, which is New York open, in bullish conditions, okay? Now that next candle, right? The other thing is you want to think about when you take this entry is where you're at on the 5 minute, right? As you can see here, oh, I forgot I can do this. I completely forgot. Wicked. So when we're looking at this, okay, you want to know where you're at on that 5 minute. And guys, I was talking about with the team, right? I was talking about the whole time that we were wanting to have our order, making sure that that order was at least inside this candle or below. Okay, so like if it was going to reach into the 1 minute demand, we wanted to have our order inside like those 680s, like 700s, right? But we wanted to make sure that we were at least inside that zone and below New York Open for the order, right? Now, as the price obviously goes for us in our favor here, obviously this is like the first 5 minutes, 8:30 to 8:35, and then 8:35 to 8:40, right? Price is definitely cooking in our favor. You're definitely getting higher highs and higher lows. Now, like I said, since the candle that printed bullish, which would have been and kind of closed higher, which would have been here, this candle here, this is what makes me start to see this as like potential to go higher, okay? And so let's see how this ends up playing out, right? We ended up taking it a little bit higher. Right, price kind of comes back to New York, tests the area. Now, as it's testing the area and we have such a great entry on that 1 minute demand, we're not really stressed because I'm telling the team, like, hey, if we never get closures on bodies on that 5 minute below, like if it just wicks away and never can get like below that demand candle, we should reject that area and start to turn up. Okay. And bam, obviously that's what we did, right? We ended up making a higher high on the 1 minute and the 5 minute, and we started to attack up towards those 29,850s liquidity, putting us up well over our risk goals for the day, right? So say you entered, like I said, somewhere in those 700 to 708s, right? I don't have these already preset on here, but 708 is like 20 handle risk. At this exact moment here, this would have been 8:47 a.m. before 9 a.m. We're already up 5 times our risk. Okay. And so beautiful trade, right? And then I wanted to see that trade go to the supply and then ended up exiting the trade in those 922s, I believe. Let me look really quick. I forgot that part. Futures, I ended up exiting in the 22s. So pretty good trade, right? Could have been a little bit better. There's a couple things I could work on, the sizing and the management, but that's exactly the trade that we took here with the Discord today. The other thing we were kind of looking at when it comes down to it, I'll look at oil is overall the higher time frame oil, we want to see it continue down lower. Like my targets on oil were somewhere down in the $70 a barrel. So if we continue to do that as well, I could see us continuously making our way up potentially on the NQs. Okay. And I don't have the SpaceX up right now. But going into tomorrow, something I want to talk about is it's really going to come down to this 4 hour demand candle overnight. Do they crush this candle and move down to 29,500, right? Like I talked about 29,500 and move down to last Thursday, June 11th, buy positions that we took, right? Because we actually took some really good buy positions last Thursday on the 11th. And so either we do that, or it was the last Thursday, it was 2 Thursdays ago, okay? And so now you just have to have understanding on this daily. Are they going to move down into the demand candle, which is going to be 29.5, or like halfway of it, which would be like 29.2, 29.150s, okay? And so if we are able to hold the 4 hour demand though overnight, so I'm talking about this area right here, just want to show this really quick. If we're able to hold this area here on the right screen overnight tonight, going into tomorrow, so this would be the end of tomorrow right here, then we may short cover and see a big amount of this expansion down be filled back up to 30,200 key level. Okay, so hope you guys enjoyed the breakdown, the understanding, what we went over when it come to just the overall entry model. Guys, you guys can go back even though you're not in the Discord, and you guys can copy this picture if you have any questions on it or want to learn how to trade it and actually utilize it. Definitely join the premium group, but definitely use it as much as you can and take as much as you can from the free information that I give out, because these things are very redundant. They happen over and over and over, and you're able to really capitalize on these trades. Okay, so I appreciate you guys again. Have a good rest of your night, and I will talk to you guys and see you on the next one.